Hey, what's going on today, guys? Welcome back to the channel. Okay, now today I want to talk about a company. It's I guess a car financing company. It's called Westlake. It's a Westlake Financial Services. And I like I personally like Westlake Financial, and I'm going to get you more into that. It's going to be a little treat. We're going to do a little treat at the end of this video, and stick around for it and we'll get right into it. All right, guys, appreciate it. All right, guys, let's get right into this review. Okay, now we're doing a review on Westlake Financial. Now, the reason why we're doing this, because I think it would be beneficial to a lot of people if you use it right. Now, when I say use it right, I'll let you know that a little bit later. But for right now, they have a lot of good things about them. They have different programs that you can get into. It's like tiers, if you know what tiers are, it's programs. But one of the things that I would like to talk about, they have this one. Okay, it starts like 0 to 599 is one. This is credit. This is your credit score. From 0 to 599 is one. Now, with 0 to 599, they will give you a $30,000 loan for a car. Now, what is so good about this is that you don't have to have like no great credit. You don't have to have, no great job, stuff like that. And I think it's really beneficial because you don't have to buy a new car. This company, you can get a used vehicle. And that's what I got. Actually, I'm sitting in it. I got a used vehicle. Now, I really like them, but starting out first here is 0 to 599 credit score. You get, $30,000. You don't have, you give them your name, your address, and your income. Do not give you don't have to give them your social security number. This is just a pre-qualification. Okay. And this has been a pre-qualification. You give them all this information, and then they set you up with dealerships that you would, want to find your car at. And then, once you find the car, you have to go deeper into it, but we'll get to that. Okay. Now, first here is from 0 to 599 credit score. And the second one is from 600 to 699 credit score. Now, from 600 to 699 credit score, you still get the $30,000. This is what they call, it's the gold program. So you still get the $30,000, but your APR will run you between 9.9 and 24.99. So that's not too bad. If your credit score is not up to par, something you can work on. And this is what they really good at, is building your credit. And this is one of the companies I think is really good for that. Now, I just said from 600 credit score up to 699. That's the gold program. And then you have the platinum program. The platinum program is from 700 to 750. And then from 700 to 750, which is your APR, runs you from 599 up to 20.99 as far as APR. So it's a better APR, but I'm sure the higher you go, do your research. Just like anything, the higher your credit is, the higher your credit score is, the better your APR is going to be. So now this one right here is from 700 to 750, which, is a 599 APR to a 24.99 APR. Now, once you get 750 or above, that's when you're in the titanium program. Now, titanium program, it takes you from 750 plus, and your APR can run from 1.99 up to 8.99. So, and I think that's 1.99. That's probably the best you're going to get. I'm assuming. So, and it runs you from, 1.9 APR up to 8.99 APR, which is real good. And, I'm glad they have, different programs and stuff like that, because it kind of lets where you're at and stuff like that. So that's pretty good. Now, this is something really good, because if your credit score is above 700, you can actually qualify for no money down. But if it's below 700, around six something, then I guess it depends on what your score is below 700, but it can run from 7.5% of the total value, or 10%, of the value. Which 10% depends on what it is, because that, for $30,000, that could be $3,000 down. But I'm sure the variant, like I said, depends on what your credit, if it's below 7. But if you have a credit score of 700 and above, you can get qualified. Most cases you can get qualified for zero money down, which is pretty good. Now, I wouldn't do this, but I'm just going to go ahead and let you know. If your credit score is over a 600, a lot of times you can take out like 150% of what the car is. To get you extra money, I guess, for whatever else. It's an option. But one of the reasons I don't like this option is because it's called loan to value. Now, loan to value can be a little risky, because if you do 150% of the loan, that means you're already bottom up. You know what I'm saying? You've got to pay back more than what the loan is. So I don't really care, for that too much. But it's the LTV, which is loan to value ratio. But, which is one of the things. Now, as far as pros and cons. Okay, let's start with the cons so we can end up on a good note, and then I can talk to you more about it. Now, one of the cons is people have said that the APRs might be a little more than the company says they are. So that's not good. That's kind of, false information. But, I guess you really have to look into that. And I don't know how you would get out of that, because I don't think they give you the APR until you've done a full credit check. I don't know. That's something good to look into. But then another thing is direct lending. So indirect lending. So what it is you do all this stuff pretty much online. Everything you fill out and all that stuff is online. You look at the cars online, pretty much everything is online. So you really can't negotiate, anything. So if you want to negotiate your APR or negotiate, down payment or anything like that, this might not be the place. This might not be the place for you. And that's one of the cons to it. Now, those are the only two cons that I know of. Now, the pros, there's some good pros. Okay. Now, let's start with some of the pros that you want to know about. Pros that you want to know about: credit score. You can get in, like I've told you before, you can get in with almost any credit score. So that's good. And then you can get in with no minimum income required. So that means, when I said no minimum income required, means you can pretty much work anywhere, but you will probably have to get something more suited to your needs. If your income is $20,000 a year, they might not let you get a car that's $30,000. But I don't know. That's just, just giving you the information pretty much like I see it. Now, as far as a few restrictions, they do not set, as far as the cars, they don't have a set being used cars, they don't really have a set price. You can find a car for $2,000, or you can find a car up to $30,000, a used vehicle. And, they will agree with it. Even the mileage. They don't even, because, if you find a car for $5,000, ain't no telling what that mileage is going to be like. They don't really care about the mileage. This is almost like an upgrade used car place, without having, to pay outrageous amount of money, every week, every 2 weeks. A lot of them places go by, how you get paid. If you get paid every week or every 2 weeks, that kind of judges what your, weekly payment is going to be or whatever. And even usually down payment is set. And them places, they're usually, $2,000 if you're getting something decent anyway. But so that's pretty good. Now let's go back to kind of what you need and how to get in the game. Okay, number one, you search for the car. You go on to Westlake car directory. Go on to Westlake car directory, find the car you want. Submit the information I was telling you, just your name, your address, your income, stuff like that. Do not give them your social. Well, you should not have to give them your social security number. Okay. Now, 2, you have to fill out a pre-qualification loan. Now, this is all dealing, with everything. A pre-qualification loan, and then after you do the pre-qualification loan, and then once you're qualified, they check all your information. Once you're qualified, then all you have to do is review and accept the financing, that they're offering you from the dealer. So if they're wanting you to accept the financing and all of that, the APR might already be in there. So you might be good on that. So accept everything, if you do accept everything, and then you'll have to fill out another application, which they will do, a credit check, and they will, probably need your social security number, all the stuff. If you've ever, financed a car before, they're going to need all that stuff. Social security number, you give them your name and address, and they're going to check, to make sure you are who you say you are, your identity, and stuff like that. So yeah, full credit check. Once you agree to it, then they will, check your credit or whatever. So, which is pretty good. And like I said, I do like them. I have a, this Jeep, Grand Cherokee through them. Now I'm fixing to put up here and show you that, kind of how my plan is going, because what they do once you get the app, which I pay for everything on the app, and which is great, by the way, once you get the app, they're going to put your payments up there. They're going to tell you when you need to make the payments. They're even going to tell you when they will accept your payment. Okay, now that's what I do, because my payment isn't until like July the 9th. But they send me, like, through my email and stuff like that, they say we will accept your payment. And my payment is usually the 20th before the 9th. Let's say this is April. What's today? April 3rd, April 2nd, 3rd, or whatever. My payment's not due until the 9th. Well, I've already made my payment. I made my payment back on the 20th, on March. So what that does, listen to me, what that does is that save you all of that interest. That's interest for like, 2-3 weeks. So, and right here that I'm showing you is how much money you can save when you do it the way that I do it. Because if you look right here at the interest, and then you look at the principal, my interest might be $122, might be $150, but the principal will be, whatever's left over from, because my payment's like $400 every month. So if my interest is $150, then it actually put like $250 to the principal. Now, also, if you just make a regular payment on your due date, man, you're putting like, it's opposite. It's opposite. You're actually putting like $150 to the principal and $250 to the interest. So that's what I wanted to get on here and talk to you about, and just tell you guys I really appreciate you watching, and I'll catch you on the next video. All right, thank you.